Hello, fellow traders. 'Tis I, the Rumpled One. Monday, October the 15th, the year 2018. Let's talk trading. Failures are instructional. I was watching a Dave Chappelle interview, and I don't remember who he was being interviewed by, but he replied to a comment and he said, failures are instructional. And I started pondering that because, you've heard the saying, you learn from your mistakes. You learn from failure. In fact, way back, I think it was probably in the 1970s or 1980s, whenever Success magazine, made its debut, I thought that there should be a magazine called Failure because you can learn a lot from failures. You can learn what not to do. I mean, those of you who watch my prepping videos or maybe even my movie review videos know that I say in movies, if people didn't make, stupid decisions, movies would only be about 5 minutes long. You know, oh, the monster's in that room. Let's not, so we'll just bypass that room. We won't go in there. Or, um, we've got the drop on the bad guy, but rather than, shoot him, we're just going to talk and talk and talk and give him a chance to disarm us and then, shoot us with their own gun. So, but anyway, back to trading. Failures are instructional. Now, there's many types of failures, and if you've been listening, watching these videos for, the past, I don't know, 100 and 200 or however many trading videos I've put out, I'll talk about having a plan and then not failing the plan, like, as we call doing an airball trade, just, oh, I'm just going to put that trade on. You did not, you just, and that's a failure. And what you have to do is say, okay, I did this, so I'm going to not do it again. And you have to set it up so it's almost impossible to repeat that mistake. You can have your pre-flight checklist, your pre-trade checklist. We've talked about that. But you see, the thing is, failure. What is the failure? Is it the fact that you lost money on a trade? Is that a failure? Now, it depends. If you did everything according to your trading plan, you entered the trade on time, you put your stop loss in, and basically you really never had a chance to take profit, and you exited that trade with a loss because your stop loss kicked in, that's not a failure. Now, on the other hand, if you failed to put your stop loss in and there was an opportunity to take profit, but you got a little greedy, rather than take that 5 pip profit, you were thinking, oh, this could run for 100 pips because, we're coming off a bottom. Next thing you know, you're at 3 pips profit, but you're hopeful. You don't want to trigger it. Now you're at 2 pips profit and you're coming, oh, come on. Now, next thing you know, you're at -1 pip and you're screaming at the screen, the screen, you bastards, and then next thing you know, you're down 5, 10 pips. Now, you're panicking and maybe you do something else that you shouldn't do. I mean, you just spiral, as they say in poker world, you go on tilt. Well, see, that's a failure. There's many failures you did. And so the next time you have, you make a little bit more of a detailed trading plan and checklist, your pre-trade checklist, and it's like you've got everything, lined up, you've got everything checked off. So when you make this next trade, you enter this next trade, you don't repeat that failure. So just remember that failures are instructional, but make sure you are actually labeling failures properly, because just because you took a loss doesn't necessarily mean that trade was a failure. So let's take a look here at money and risk management. If you fail to calculate your risk properly, and then calculate your position size or stop loss properly, that is a failure. Do not make that failure. Okay, here, 37 pips off the low. I think when we checked in yesterday, we were right about the same level. So not much movement there, right? And you can see here, we did exit both sides of that lower wick zone. Here, the weekly wick zone. And we filled the gap here because yesterday this gap wasn't filled. So once again, traders, I can't come out there and click the mouse. There was a bunch of unfilled gaps. I think these euros were unfilled. So you can just look at yesterday's video. I mean, yes, I even put it out, 7 hours into the trading day, but we had some unfilled gaps. And if I'm not mistaken, I believe I believe they are still unfilled. So you see right here, you've got some opportunities. 1, 2, 3, 4, possible 5 opportunities to still take those gap filled trades. If you don't want to, you don't have to. But don't tell me I did a hairy hindsight when I'm telling you, in a Larry Live time that, these trades are available. I'm not saying they're going to fill. I'm just saying it's available. We'll wait. It's only Monday. Let's see what happens by Friday, right? Okay, on the daily, we exited the daily wick zone to the upside and to the downside. Now we're back in the wick zone, and we'll just have to wait and see which way to go. And you can see things are a little anemic today. We've only got 4 pairs over 100. The euro yen only at 67, just 6 ahead of the dollar yen at 61. And for those of you just tuning in, if you wonder why I don't flip back and forth between pairs, it's because we're doing trading here. And the reason we stick with one pair, or I stick with one pair, is I cut down on the variables. Now, somebody could say, but you're putting all your eggs in one basket. Yes, I am, but I'm going to watch that basket very carefully by employing a stop loss, risk management, money management. But, each to your own. If you can juggle more than one, feel free. But for instructional purposes, we stick with one because we show just how many opportunities they are just by trading one pair. And this way, if I were to flip over, say, to dollar yen, and then I'm watching this for a while, then all of a sudden I flip back over to the euro yen, and then I missed a really great trade that I wouldn't have missed had I been watching it, then I kick myself. And then while I'm watching the euro yen, I flip over to US CAD, and it's just like, oh, I could have had that. So now I'm here, because look, could have had a really nice short right there and a nice long out of the daily wick zone. But this isn't what I'm focused on. So I'm not worried about what I could have had. No, I'm going to focus on the pair I'm trading. I cut down the variables, and this is especially true for new traders. You want to have all these fancy dashboards and all this stuff all over. No, you don't need that. Just focus on the one thing. Get your fundamentals right. Make sure you're executing everything on this one. And I'm telling you, this is the voice of experience talking. Once you learn how to trade one pair, so long as that pair is producing, you're going to not have the desire to look around. Because I don't really have the desire to look around because I know from experience. I mean, I was on the dollar yen for how long? Over a year? Okay, but then I noticed that all of a sudden the range, the volatility was shrinking, so I flipped over to euro yen. And right here we can see buy zone trade, profitable. Okay, sell zone trade, not so much. That looks like that should have been a scratch. Buy zone, profitable. Once again, when do you take profit? You let price action dictate it. You see it put in a new high, price open, came back up. And right here, when it cuts through, gets into that high, you could stop out there, or you could wait when it exits the previous candle's wick zone to the downside. Out! You're out! because you know price doesn't like to stay in the wick zone. So if it exits to the downside, just jump out. And here we go again. There's profit here. You got back in, you took it. You see, hey, guess what? It didn't make a lower low, so it starts to come back up. Take the profit. Okay, so it's only 4 or 5 pips, right? It's better than getting here. Maybe if you put your stop loss at right above the open, you would have been triggered out. And again, you have another opportunity here. Okay, if you ride, it came back down. What happened? It starts to go back. It's in the lower wick zone. It exits. As soon as it turns green, you should be out. Take the profit once again. Price action is telling you, looking at the wick zone, when price exit the wick zone, what happened? Look where it shot up to. And then here, you're in here, take the trade. Once again, price goes up, came back down. You could enters that upper wick zone. You could either exit here, at worst case, exit there. And then what happened next? It touched the zone with a red candle, and only you pro traders should be taking that as a long if you want to. And then it shot up once again right here. See? Went up a little bit higher, comes back in here, comes into this wick zone. You should be out with a profit. What happened here? You've got a price opened here, went down, opened here. Hey, what's this? Buy zone. Once again, there's a trade. And you see, pulled back right here. There's a wick. It almost hit that wick, right? Pulled back through this wick. What's it telling you? Out. Take your profit. It's simple. Okay. You see here, we've had a nice rat reversal off. See, we put in the low, then we put in this high. Nice rat reversal once, twice, 3 times. A rat, right? 3 times a ratty. And we almost hit that pivot. Remember, I told you to look for it. So you see right here, we got in that central pivot range right in this area. And then price reversed out. So you see it didn't quite make it. That was another reason to exit the trade. And see, that's still a missed pivot, maybe tomorrow. And we see the price action. I believe yesterday, where did we leave off? 1, 2, 3, 4, 5, 6, 7, somewhere around here. But you see 3 ball at the bottom, green at the line right here. I mean, you could say, well, price came down here, didn't quite go here, reverse. Maybe you took it right at the 20. If not, you waited to the 25. I've got these set every 5 pips. And you can see here, green at the line, you can go long. Okay, 2 ball at the top, red at the line short. 1 ball at the bottom, green at the line long. That's just how it works. Once again, candle colors at the line. You just take them. Wick zone, price doesn't like staying in the wick zone. In and out, as we see every day. Holo zone, put in a nice high and reversed. You started off with the low there, put in the high there, and out. Inventory reduction bars. Let's see. I guess we had a long trigger. It was a long trigger here. Actually, there was a couple here, here, here. You see, there was also a long trigger put in there. A short trigger was put in here, and you can see there was a short, and then a long trigger just got put in here at the M15. So long is at the 0.50, and the short is at the, looks like 0.33. And one of my favorites, once again, just horizontal lines. You can see here, we've got the movement once again on the tick chart, just a little to the downside, not much action. Einstein line, calling a short right here. So, fellow traders, I want you to remember, failures are instructional, and it's not what you trade, it's how you trade it. So let's continue the draining of the banks.